And I haven't eaten at a Wendy's in a while. The stock is down 19% in the past year. They have a big dividend of 6.5%. And analysts are saying that it's discounted by 32%. Over the past year, it's really done nothing. It's down 30%. You get that dividend, but you're barely breaking even, which is not a good thing. If we invest in stocks, we're taking more risk than putting our money into a savings account, a CD, or better yet, buying a bond or a bond ETF. Those are presumed to be very low risk. Stocks are a high risk, and we should get a higher return. And that's not the case when it comes to Wendy's. It's pretty much a losing stock over the last 5 years. Are they turning things around? Is the business looking better going forward? Well, let's take a look at some of their fundamentals. From a growth perspective, the growth looked good in 21 and 22. I think there was casual dining did quite well when everybody was cooped up at home due to COVID. But now Wendy's is not growing their business very quickly. In trailing 12 months, the growth is only 1.6%. In the full year of 2023, revenue was only up 4.11%. So that is a problem. If you can't grow, that means that other competitors are probably doing far better than you are. I know in this space, Wendy's is kind of a more older restaurant. Maybe they're losing some of their appeal to the consumer, and they're not seeing as many customers, net new customers, become Wendy's clients. Their gross margin, 35%. I think that's reasonable for a restaurant. It's a retail business. Their free cash flow is not great. It's 280 million. The one thing I could say, it's been consistent, and it has had a more recent growth push. So that's been good. This business is probably worth about $3 billion less the net debt that's on the balance sheet. Let's take a look at that. They have $4.1 billion of debt, and they have $482 million of cash. So they have about $3.6 billion of net debt, which is interesting. Let's see what their market cap is. Yeah, I think this stock here is just not showing me enough. It carries more debt than it has as a market cap. And the cash flow supports a market cap of probably about 3 billion. But when you deduct net debt from that, you get well below 3 billion. So this one here would be a hard pass for me, just because there's not enough equity value in this company. If you look at all the shares that own the stock and then you add that debt, this business is just not very valuable. It's not a very desirable business. It's an older restaurant chain. It competes with McDonald's and all the others. The restaurants that are probably appreciating quicker, I know that Shake Shack's doing quite well. They've been opening new restaurants. The restaurant business, from what I've observed, is interesting. Younger restaurants tend to do well because they're a new thing. And I guess the consumer is interested in tasting something new, something they haven't tried. So they experience good growth. But after a certain time, it's an industry that's not desirable to me. It's restaurants. You have to hire a lot of people, rent out real estate that's usually expensive. The operations are expensive. Your margins are a little bit low. And you never create an incredibly valuable business. Even Shake Shack's 5-6 billion overall in market cap. So that's not a very, very big company. The biggest in the space, I believe, is McDonald's. That's above 200 billion. And that's a business that's been really successful for a long time. So this one here is a hard pass for me. There's just the fundamentals don't support the market cap. And maybe the stock market has realized that, hey, this is just not a highly desirable business. Not a lot of investors want to own it. So it's being sold off. So that is Wendy's. I haven't had a Wendy's meal in a long time. I know that, way back when the last time I was there, I did enjoy it, but there's so many choices out there. There's so much competition for Wendy's to face that it's just a tough business. Another reason why I think it's an undesirable industry for me. I'd rather move to an industry that I think is more desirable, is going to command better margins, make more money, accumulate more cash, and create a more valuable business.